Hey traders, happy Monday. Chris Pulver here with the weekly outlook, talking about all things stocks, forex, cryptos, the week of May 18th through the 22nd. We are seeing some pretty clear risk appetite and risk on trading right now. Oil is heading up to that $35 and $40 gap. We see commodity pairs doing well, like the Aussie, the New Zealand, the Canadian dollar, safe haven risk off pairs like the Swiss, the yen, and the US dollar all weaker. So coming off of last week's movement, which the U.S. markets finished in the negative. The Dow Jones, the S&P, the NASDAQ all down. NASDAQ managed to only drop just over 1%. The Dow Jones and S&P down over 2 2/3 and 2 1/4 respectively. Bitcoin also dropped. We had highs back up around $10,000, and Bitcoin ended up dropping back to 9,500, which was down for the week. But we will take a look at the charts. We'll look at stocks. We will look at Forex. We'll look at cryptos. I had a lot of chart alarms going off last week. A lot of interesting levels that I was looking to buy, some of those March levels for some of my favorite watch list stocks. I'll talk about some of those today, as well as get into what I'm looking at directionally for the Forex market, and we will review cryptos as well. So that is me, Chris Pulver. Keep it seriously simple. Nice video series that's free for everyone on YouTube, my YouTube channel. So go ahead and check that out. Search me on YouTube. This is how you can find me on social media, Instagram at pulver.chris. I've been posting a lot of these weekly outlooks on my YouTube channel, as well as linking them on Twitter and Instagram. So just make sure it's at pulver.chris on Instagram, at pulverchris on Twitter, or just type in my name on YouTube and Facebook. So let's get into the charts here for a moment. This goes back the last several weeks now with my SPY and my weekly outlook for the overall markets. I did say that an important level, a critical level for the stock markets in the U.S. is a break below this April 21st level. You can see that last week we had a test of that low, but you can see that the bulls closed higher. So what does this mean? Well, it means that the bears are still reluctant to take control of the market, and this is not breaking and closing lower. And if we don't break and close lower below that April 20th and 21st low, then we're not going lower. So what we have instead are equal highs and equal lows, and the stimulus packages, the market just seems reluctant to really have any volume to the downside. Volatility remains somewhat subdued, and we're seeing here that the VIX is back to 29. Let's take a look at that volatility index really quickly. So we have seen, here's the VIX, or the fear gauge. We saw a nice little run from 26 all the way to 39. That was actually why the SPY was dropping. So when we came from roughly 294 all the way down to 273, that drop in the SPY was pretty much nailed to that high to low swing in the VIX. So as the VIX continues to head lower, possibly coming all the way back down to fill this gap into the $20 mark, if this continues to drop, we will likely see the stock market and futures market continue to head higher. So Wall Street is officially open. We see a nice little gap today. However, look at where it is opening. We're opening at equal highs. So it's going to be a really critical candle for today and for this week to see, are we actually making any progress above or below? I think that this level right here, this was a bit of a fake out to the upside. We have equal lows down here. So this is the structure where the bulls need to somehow hold and see if they can close higher than this previous high. If the bulls can close higher, then we're going to continue this melt up, this drift, possibly back into larger swings from March. We're currently at that 61 to 70% level. One thing that I was actually talking about last week in my trading room was a potential indecision area. It would make sense from the timing of this year with everything that happened in March, in April, everything essentially like the central bank kitchen sink that's been thrown at the markets to suppress volatility and kind of stabilize the markets. We have a U.S. election coming up in November. Now, I know that seems like a long ways away, but we are nearly 2/3 of the way done with May. We have June, July, August, which for the most part is just summer trading. I wouldn't really expect a lot of fireworks in the summer. You come out of the summer, August, September, you might have a brief post-summer breakout, but heading into October, November, it's not that far away. And as I'm seeing this 70% level right in here, if we have a swing from high to low, and this market finds a way to get back towards this 70% level, what we could be looking at is the start of a wedge where we have a high to low, a lower high to a higher low, to a lower high, to a higher low. Now, we might not have that much volatility, but to me, it would almost be fitting heading into a U.S. election where the market towards the end of the year and towards Q4 is where the next big move is going to be. So Q2 is really just seeing who's surviving, who's going bankrupt, who's going out of business, how are we getting back to normal. Q3 is, okay, are we actually getting back to normal? Are businesses returning? How are profits? What are earnings like? I mean, the market is looking past a lot of negative news right now. We have 30 plus million unemployed or claimed unemployed in the US, and that's not just the US. I mean, obviously the job numbers from Australia last week, any unemployment claims that have been coming out for any country have been pretty much awful, but the market's not pricing that stuff in right now. So I think that just the anatomy of this structure, this high to low, we're right around that indecision point. I could see us forming some lower highs and then heading back down into higher lows. I mean, something like this, where if this is the type of structure that is created, then it is just all building up towards a Q4 and presidential election breakout. So this is one thing, like I said, I discussed in my trading last week. I just asked all my traders, would you be surprised? Would you be surprised to see what we're dealing with right now to create a lot of indecision as we head into the election in November? And everyone along with me said no. I mean, I would not be surprised to see indecision, kind of low volatility, tough trading, not really clear decisions anywhere. And we just have to find a way to find some movement. I mean, that's the good thing about looking across multiple financial instruments is there's always something to trade. But for the most part, the big picture is not really giving us any clear direction. So the next big catalyst, either we have a second wave of COVID cases or we have the ever-changing business landscape, for better for worse. I mean, if we're actually seeing some nimbleness and agility in businesses and they're recovering, and we go from brick and mortar to e-commerce. I mean, for example, Lululemon came out with crazy good sales. I've got here a little takeaway from Lululemon. They had 400 closed stores, and yet they went to 100% e-commerce and ended up increasing sales. In fact, over Under Armour, over Nike, Lululemon was up over 6%. So is that going to be every company? No. But companies that can pivot and can stay agile, nimble, go to e-commerce, that is definitely higher margins, better logistics, and probably the future for a lot of their survival right now. So anyway, let's take a look at some stocks while we're in here. So the S&P 500, we gapped higher today. Here's the just a little dashboard from MarketWatch. So we have futures on the rally. We had a large, 2 to 3% gap higher on the U.S. markets, and I do suspect that this will end up filling. So let me go back into the SPY really quickly. We gapped right back up to the April 29th high and this early May high before we drop back down to that volatility index. We're sitting right here. I would not be surprised to see this gap close. And even if we drift a little bit higher, don't be surprised to see this gap close. So either this gap fills today or this gap fills probably by the end of the week. So I think that there's a lot of short-term trading opportunities right now. In fact, that's probably the best way to be positioned is go after little profit chunks. I mean, for some levels, some stocks, I'll show you in a minute, I'm buying some and holding. For currencies, I think that probably a 1-hour chart is maybe the largest you want to be trading. We're getting an awful lot of range-bound movements in currencies. We've had, daily indecision levels on a lot of currency pairs. What that looks like on a smaller time frame is just lower waves. So we've had oscillation between highs and lows. You can see that really clearly on like a 15-minute chart, a 5-minute chart. That might be the best trading right now for those that are looking to get active, is going down to smaller time frames, identify some highs and lows, and look to buy low, look to sell high, or have some robots going in really aggressively, going after like literally 20 to 30 pip profit chunks because volatility has slowed quite a bit as well. I actually brought this up here. This is a 2-week look of Forex volatility. You can see that if you compare this to like the 10-week, where this goes back into, I guess it goes back in towards the middle of end of March. If I go back to the 10-week average, you're going to see these volatility ranges are increasingly higher. So look at the Aussie CAD, for example, 131. That extends back into March's highs, right? We had super volatility in March. Then it started to trickle down in April. It's extremely low in May. But if you go back to the last 2 weeks, which is what I think we're trading right now, look at how much smaller the ranges are. 131 cut down nearly in half. Aussie Swiss, 65 pips on the Aussie New Zealand. Aussie Dollar, I mean, it was way over 150 pips. Now it's 82, right? So volatility has shrunk quite a bit. Take a look at your pound crosses. If we go back to that 10-week average, you're going to see some huge numbers on these pound pairs, and especially the Aussie pairs. Pound Aussie, 291, almost 300 pips a day. Now we're at 150. So volatility has been cut significantly, nearly in half. And this is what we dealt with for the last 4 or 5 years, which was arguably a low volatility environment. So how do we survive it? How do we trade it? like I'm saying, short-term opportunities. Go after those 20, 30, 40 pip runs. I mean, some positions I'm holding. I certainly have some longer term positions that I'm in. Euro Swiss I'm holding. CAD Swiss I'm holding. Aussie CAD I'm short at 91. I like that level, so we'll talk about that in the Forex market. But let me get into some stocks here from when I had a lot of chart alarms going off last week. So specifically ones that I'm interested in. Let's see here. I was looking at Wells Fargo. So we have Wells Fargo right in here. And we came back down to these lows. I did take a little stab on Wells Fargo at the lows around $25. I put a limit buy-in at 25. I'm currently holding Wells Fargo at $25. I'm looking to see, can we get up, safely back into 35 and possibly $40 on Wells Fargo. So here's what happened last week. If you watch these weekly outlooks for the last several weeks, I'm really only interested in stocks that have come back into these lows. So Wells Fargo's one chart alarm goes off. I got filled at $25. Bank of America was another. Chart alarm went off just above $20. I did not get filled on my order because I had a limit buy at 20 bucks that didn't get filled, but it's close and I'm watching. We had lows back here at $20. We had this low right around 18. So that's where I'm looking to buy Bank of America as well. I saw that Delta Airlines, DAL, was back down to lows. If interested, as far as, any airline surviving, that's probably the one that would survive and do quite well. So again, $20 to $19 on Delta. I did take a small stab. I took really a third of a position on Delta right around 20 bucks. So I'll see if that can get back into some of this gappage around $40. But this one, I understand, is going to have to recover. This might take a lot more than just, a short-term rally in the stock market. We need to see that oil is stable. We need to see demand coming back. Travel is starting to resume. And that's probably maybe 3 to 6 months off. But again, I might be looking at what other investors are looking at is if you're not short-sighted, looking at the long term, maybe in the next, 6 to 12 months, if people are getting back and traveling. And it's, we have acceptable policies at the airports for social distancing, safe measures on the planes, whatever it may be. The landscape might change, the social policies might change, but if people are still willing and able to travel, then Delta Airlines, I think, is one that's going to do fine. So I do like that one. A couple other ones that were chart alarms had gone off. Let's just look at oil really quickly, and I'll go to some other stocks here. Oil making a nice little run right into our big pocket here. We said 35 to 40 bucks, expecting oil to rally. Is that lifting our ETFs? Is that lifting USO and UCO? And it is not quite having the same reaction as expected. You have to remember that UCO and USO are futures priced ETFs. And it takes the negative May contracts in what we're going to see in June as well. Now, U.S. oil is recovering. Technically, this is doing exactly what we want it to do. However, is it translating into a bigger move in USO? Not really. You can see that today's movement in USO is around 24 and change. We have a nice monthly pivot right around $28. We have lots of gaps and everything else. But this certainly has room to recover. But you can see that the trajectory of USO and UCO are moving very differently. So I did take some small positions here on USO and UCO. They both got repriced because I bought them at single digits. They got repriced. That's what futures contracts and ETFs can do. So as much as I would like to say I'm going to double and triple my money on these, making break even, making 5 to 10%, I'll be totally fine with because I certainly got in way too early. This was definitely more of a hype buy than it was a well thought out plan. Because I did not think about the futures contracts or the decay. I just thought, hey, I'll take a stab at it. So not my finest moment when it came to pricing that in, and so therefore I'm sitting on some decaying ETFs right now, and we'll get it back. I mean, I'll hold it until we get close to break even and take it for what it is. Meanwhile, the volatility index continues to stay subdued. We start watching these SPY levels once again for stocks. Other ones that I'm interested in, I do have some stake at Ford that I bought nice and low. Ford came down. I bought this actually around $4.50, and we're sitting around $5.20, not breaking any higher. So you can see some indecision here, possibly some indecision there. Now this might just be a continuation to head one more time lower before a reversal takes place, or we start breaking this structure to the upside and coming back into this high to low swing. We pull back into the 38%, the 50, the 618, all these major Fibonacci levels. All that's fine too for some short-term gains. And again, I might protect my profits there. And if I get from $4.50 to say $6 or $6.50, I'll take that chunk and maybe just reinvest it later. So I am in Ford. I also bought GE, a big one that I bought at the lows. I got filled right here at the bottoms, right around $6. We came down below that at $5.50 and back up towards 6 and change. hopefully there's enough divergence here with a monthly target. Those pivots right there look fantastic. So if I bought it at, right around $6, it gets to 7 or 7 and change. Take the short-term profits and reapply it elsewhere. So for the the profits that I am looking to take and protect in stocks, that margin is going to go into something else. I have more long-term trades or long-term investments as well, stock-wise, that I'll just reinvest in those because they're at pretty good levels right now. But I'm just kind of still watching. I know there's been a lot of news and heat around Warren Buffett. Is he losing his moxie in the stock market? Is he short-sided, long-sided? Is he making big mistakes when they dump the airline stocks? Historically speaking, Berkshire Hathaway has done a pretty amazing job of outperforming the S&P year after year, or as far as annualized gains, Berkshire has done quite a great job. As far as the A shares and B shares, if I'm holding and buying, I mean, this goes back to my college days. I've had Berkshire B for a long, long time. So if you take a look at where we are on the weekly, okay, I mean, we've seen some declines. I did protect back in 2018. We had these highs back in October. It was like September, October, I went to cash on pretty much everything. So this was one of them. So I wouldn't mind picking up some Berkshire B again, but I want to see if this has one more push lower. Is this high to low, maybe coming into some divergent lows down here, and then we buy that. If this comes back, I mean, this would be amazing, pretty much coming back into 2015-16 levels. So a lot of my kind of stock gauging is, where's the SPY? If I'm going to be a bargain shopper on the SPY, I really hope that we see something down here in the SPY. Now, I don't want to know what the news cycle looks like and how doomy and gloomy and how negative it's going to seem for the stock market to actually have some movement to the downside. Okay? But if I'm going to buy the SPY, I want to buy it at 200. I want to buy it at 180 or lower. I mean, that's where I look at buying low, and even if we never recover to those highs for 2 to 5 years, at least buying it at a technical level that gives me a chance to buy extremely low and see some upside, as opposed to right here just off of the highs. I mean, we're not even. I mean, from current price on the SPY. So we had the high back in February around 339. So let's just do the math here. Current price is 293. So 339 minus 293. 339. I mean, we're only 13.5% off the highs. Now, yes, we did have a 30% correction, but is that it? That 30% was everyone that was on the sidelines for the last 3-4 years. Is that all we're going to get? That's the last chance you're ever going to have to buy stocks? I think not. So that's why I'm saying, would anybody be surprised to see the stock market have, going into an election year, which I thought 2020 would be, that would be the focus, would be an election year. Coronavirus has taken the market into new directions and all sorts of weird uncertainties that we're trying to buy our way out of with long-term consequences, but nobody seems to be pricing in it right now. So this movement right here to this potential indecision as we go into summer trading, if this is what we're dealing with, okay, then most likely I will still be a sideline spectator for stocks and waiting for great levels on stocks, and I will be a range trader and a scalper in the Forex market. And by scalping, I'll be pretty flexible on my entries, but I want profit targets that the market can actually hit. So, perhaps setting a 200 to 500 to 1,000 pip profit target is not what I'm going to do. It might be better to go after 20 pips, 30 pips, 50 pips. I mean, even if I'm giving myself more downside as far as I'll take on, let's say, a trade that I'll buy here and I'll buy again and I'll buy again, and I go after like 50 pips. I mean, I'll be flexible on taking entries, but going after whatever the market is capable of doing, whatever a daily trading range is. Let's say it's 50 pips a day in Forex. Well, if I can grab 20 of those pips, fine. And then another setup and another, 20 pips if the daily trading range is 50, 60 pips. So, higher volatility pairs is great, but it's not the same as trading in March. I mean, March was day trading, intraday, breakouts, right around, London session, US session, you're getting like these easy 1 hour breakouts and running for, 50 to 100 pips, really straightforward trading. It's not that way anymore. We're literally taking all day, all week to see a little bit of movement. And I'll show you that when we get in the Forex market, but this is why. Look at where we are in the stock market. We're sitting here now. If we go back to the daily chart, there is a ton of indecision. Okay, this is not going to be an easy trading environment. This stock market is going to make it more difficult to trade in the currency world. All right, so be prepared for this indecision to create a lot of indecision in the Forex market. But good thing about trading in the Forex market, that indecision is range bound. That range bound trading provides us with strategies. We can sell high, we can buy low. We just go to the right time frames, identify that structure, and go after aggressive profit targets. So systematically, perfect storm is going to be a great strategy for that. Equalize will be a great strategy for that. Right trader, take it down to a smaller time frame. Scalping something like the momentum breakout charts, you could use the micro price detector, going after like 10 pip and just trying to pack away some wins for the week and move on. So speaking of moving on, it's time for us to take a look at some other instruments. So let's do that here. One quick note before I go into these symbols. For everyone that is interested, for all of the followers and watchers out there on my YouTube channel, appreciate all the feedback and shares and likes of this video and others. We now have our trading rooms right inside of Smart Trader. So you can go into smarttrader.com, click on the marketplace, and look and explore our trading rooms. Also, there is an icon inside of Smart Trader right here. There's a little live button. If you click on that, it will highlight the trading rooms and will look something like this. So trading rooms, you can pick different ones. We have all these different trading rooms. Mine is called the Flex Trading Room. I run this on Tuesday, Wednesday, and Thursday from 8 a.m. to 10 a.m. Eastern Time. And we talk all things stocks, Forex, cryptos. We have plenty of trades. We track all our trades. We have robots running. We have manual trades. We buy low. We sell high. We've been very profitable. I mean, I've been doing this through this trading room format for the last 3 years. We've had a lot of success and looking for many, many more. Plus, I mean, with the current environment, it's always nice to be trading with thousands of other traders so you know that you're not alone and we're collectively seeing the market and trying to be as unbiased as possible. And we never want to be just one-dimensional traders. We want to have, plenty of tools and resources to stay agile, stay nimble, and make the adjustments necessary to make sure that even when the market's, barely moving, we can find ways to still take trades and be profitable. And the market is moving. We want to make sure we're deploying the right strategies on the right currency pairs in the right environments and just do whatever we can to be successful traders. So smarttrader.com, go into the marketplace. You can check it out. We have all the different trading rooms. Mine is called the Flex Trading Room. And if you have any questions on that, just let me know. But again, that's smarttrader.com. Click on Marketplace. Mine is the Flex Trading Room. You get involved. We do Tuesday, Wednesday, Thursday sessions starting at 8 a.m. Everything is recorded and archived, and I have a lot of fun doing it. So now let's move on to the trading world. So oil continuing to head up towards this $36 to $40 gap area. Path of least resistance is bullish for right now until that gap is filled. What I'm looking at is specifically if anyone is long and getting a little bit of this oil run, protecting profits into here, letting your profits run into here, but make sure you're trapping those profits in that little gap window just in case that heavy resistance hits and oil comes back down. More than likely, oil will establish a new range. Last year's range was $60 resistance to $40 support. And we broke that low there. So now from 40 down to 11, we'll probably head up into 40, head back down into, we might have an intermediate level around 25, but if we head back into that, $10, $11 level, I think between support and resistance and supply and demand and seasonality, we'll likely see some new ranges on oil. So, I mean, again, it's bullish for right now. We hit 35, we hit 40, great. That should help the CAD along this week. Expecting some CAD strength, commodity strength. Another symbol that's doing quite well is gold and silver. You can see here that gold is trying to break highs, but one thing I don't really believe we're going to have, unless we see more risk off with, like I said, a new wave of COVID cases or more bankruptcies or the stock market turning sour. I think that's about the only way that's going to really drive gold. At this point, technically, gold has kind of reached a limit where we're seeing a lot of divergence, a lot of extremes, and you can see that the bulls are really struggling to take this much higher. So I wouldn't be surprised if gold comes back down into, back below $1,700. We close back below 1,700. We have some intermediate support around 1,680. We could certainly drop into the $1,500 area. There are massive support levels on gold at 1,500 and 1,365. This trend line also right here past resistance at 1,365 was broken through. Now that becomes future support. So we have a trend line there. We also have horizontal resistance and support at 1365. But for right now, you can see that, it's reluctant to really break to the upside. With this disagreement, we're probably going to stay more range bound on gold. And could this blow higher with risk off trading? Sure. But if the market's trying to price in good things and ignore a lot of bad news, then gold is probably going to end up dropping as well. If the VIX is dropping, if the stock market stays as is or starts to drift higher, gold will likely drop a little bit lower. But silver, same thing. Silver's doing quite well. XAG USD silver is sitting at 17 and change. Silver's making a great run actually, and I'm hoping that we get back to this 18, almost 19 and change level. I'm trying to take some profits on SLV if we get over $20. So I'm loving this little run on silver. I've got a chart alarm set at these previous highs from 2020. This is back in January, February. This high back in 2019 in September. And to quote the great late Lone Ranger, hi-oh silver. Let's see if we can get some of these highs taken out and see that $20 mark. I've been holding on to SLV for a while, so running up to 20 bucks would be a nice little 60 to 70% grab from my SLV positions. I will probably end up taking that, and again, using that profit, applying that elsewhere with some good bargain shopping on stocks. So currency-wise, let's take a look. Like I said, this week I'm still short on the Aussie CAD for my trading room, 9100. And holding, we have seen a lot of indecision here. We may end up drifting up into 91.80 before we drop. I'm hoping that we at least come down into, if oil is going to continue to drift higher, that can also help commodity pairs. Both Aussie and CAD are commodity based, but if that firms up the CAD a little bit, we should see Aussie CAD dropping into 9,000. If we can break below 9,000, then there's room to drop here into 8,800. So first level is 9,000. If we break below that, I'm going to try to hold on to 89, 88.50, ideally 88 before I close anything. But I am short on the Aussie CAD. I think that's a pretty good looking trade for right now. Aussie Swiss, there was no major damage done by the bears. There's you can see the reluctance for the bulls to go any higher. So we have this high, we have this high, we have this low. We're not going higher, we're not going lower. Now this could be drifting into this area, this risk on, this risk appetite could allow the Aussie to continue to drift higher. But again, major resistance here around 64 to 6,500. I will be looking for shorting opportunities on the Aussie Swiss at that point. But remember, in order to short this, I want confirmation. So I want to look for a right trader max confirmation to sell it. I want to look for a U-turn on my momentum breakout chart or my sentiment strength line. So confirmation is needed, but if this resistance holds, we should be at least seeing a price move back into possibly 61 or 6,000. And again, it depends on what that stock market is going to give us. Remember, if the stock market has the high, low 70%, we're most likely going to drop back in. This is a high to low, 70% pullback. Then we have this low to high, 70% pullback. This high to low, 70% pullback. And that continues to do that until this wedge becomes some type of breakout down or up. And that's what I'm saying, going into summer trading or post-summer, we might be sitting and staring at this heading into the U.S. election in November. So that seems like a long ways out, but believe me, with price going literally nowhere and sideways, that is a very real thing to have price do that over the next maybe 3 to 4 months. So that's one thing I'm watching and considering. But for Aussie Swiss, if the Aussie continues to get some bids to the upside, again, cautiously bullish right now, scalping bullish right now, because the bears are reluctant to go any lower. But this level, I'm definitely looking to sell the Aussie Swiss. Same thing on yen pairs. I have a JPY prediction. We're just not seeing the yen stick around very long. We have strength for a day, and then it gives it back. So it really is like changing to scalping, changing to moving stops to break even. Just be really protective right now. I don't really want to leave a bunch of positions open. We've had some great robot trades that have taken several hundred pips out. I think anytime you're getting 100 plus pips of profit with some add-on trades or some robots, protect it and consider pausing the robot and look to redeploy it, or just find it on another currency pair. At the end of the day, if you continue to sell high and buy low, rather than taking the whole trade, if you sell high and you make a nice chunk of profit, protect it and be done. If you buy low and you take a nice chunk of profit, protect it and be done. That really makes things a lot easier to just take good trades, have a high win percent, and go after some nice wins. So Aussie Swiss, resistance up ahead, cautiously bullish for right now. Aussie yen, same thing. Okay, major resistance. We're dealing with some ranges between 70 and 67.50. So it's about a 250 pip area, heavy resistance from past support, nice little gap area getting filled, but looking for this to be a range area to sell high and head lower. Now, could the Aussie yen head a little bit higher? Yeah, we could head a little bit higher. We could drift a little bit higher. But once we get up into this area, this becomes a rising wedge. We will probably end up falling. So I look for the JPY prediction to come to fruition. I expect it to drop, but without confirmation, don't sell it. If there's no reason to sell it, don't sell it, right? So we're looking to stay pretty nimble right now with current direction. Aussie New Zealand ended up having a nice little move up to 108 and change. Zooming in on last Friday's candle, the high is 107.75. We have highs around trying to get the highlight there. There it is. So there's a high at 108.24. We did have a pending order to sell it at 108.20. I did cancel that trade. I do think this is still going to drop. I'm currently not an active seller on the Aussie New Zealand. And the reason why is I want to be bullish, but I want to be bullish from better levels. So this is either one big swing to the upside that we're still looking for those pullbacks. All right. And so anybody that is short, make sure you're selling it and being really protective around 105 or lower. Anything around 105, I'm a buyer. Okay. So if you are currently short from, 107 and change, 10800, getting this thing back down into equal lows or 10500, that's a good spot to protect any sell trades. From there, I'm going to start loading up like I did back here. I was a buyer at all these levels. I'm going to start buying at 105 again at all these levels and look for this Aussie New Zealand to continue to head higher. So we do have some near-term resistance, hitting equal highs. We can see the divergence here. We're getting very much close to overbought conditions, lots of divergence from this high in price. So that disagreement should allow this to drop a little bit for this week. If that's the case, hopefully that helps the Aussie CAD drop a little bit, the Aussie New Zealand drop a little bit. The range on the Aussie yen holds. So I do expect the Aussie to dip a little bit this week, which I'm totally fine with. The same thing on Aussie dollar. Okay, Aussie dollar, the dollar is getting a little bit weaker today, but look at the reluctance of the market. We're not going lower, we're not going higher. Now we could see some range-bound levels on Aussie yen, range-bound levels on Aussie dollar. Look left, lots of support becomes future resistance. So 65.50 to 66.50, if you are long, protect those profits. More than likely that will lead to some resistance and some selling. I think Aussie dollar does drop back to 62.50, possibly back into 6,000, but we're not getting massive bearish confirmation yet. We could come up one more time to these equal highs. Again, continue to see disagreement. We might get this into overbought conditions or overbought territory on the relative strength. If that's the case, I'm definitely looking to sell it nice and high. Like I said, 6,600, 6,650 looks great for a sell trade. For right now, it is range bound on the Aussie dollar. CAD Swiss, I'm going to continue to hold this one long. CAD Swiss, let's go oil, let's go CAD, let's go 7,100, 7,140. I'm long, looking to see if we can get back to 70.30. That's the high from right here before we had the end of the month drop in April. 71 to 71.40 is my bullish profit target for me to make some bucks and some pips on this currency pair. Could it go higher than that? Yes, of course it could. It should. But I'm safely going to take some profit there around 71 to 71.40, and then I'll reassess. But I'm still long and remain long on CAD Swiss. CAD Yen, you're going to see some range-bound trading, and there it is. Resistance at 77, support at 75 and 75.25. You can see a reluctance. Now, is this a bull pattern? Is this a bullish pattern here? Well, we don't really know until price closes above and then possibly makes a run back into these previous support levels to become resistance. I don't know if we're going to get that follow through. The yen has been really aggravating the last couple of weeks by having good structure, good confirmation, and then it doesn't follow through. Good structure, good confirmation doesn't follow through. So you're getting a lot of kind of half confirm, actually fully confirmed, but half follow through trades, or full confirmation and no follow through trades. And the yens are back on my naughty list. I know it's not the holidays, but sometimes I don't like to speak highly of the yens because they do stupid stuff like this where they don't like to go anywhere. So we have resistance and support on the CAD yen, and that's what a lot of yen pairs look like right now with some ranges. Swiss yen, this is safe haven versus safe haven, so just wait. I mean, I think Swiss yen is a great buy around 106. I think it's a great sell around 114. I'm going to stay out of this one for right now. Euro Aussie. Euro Aussie, I'm actually looking to try to buy Euro Aussie really, really low. So this one on a daily chart, you can see these nice levels. Previous low, which is around 65.38. Retested that same low there at 65.30. So I would be looking for shorter time frame confirmation. If we come back into 65.30, look and see what happens. Are we going to this high, lower high, lower high? Are we forming a bit of a wedge? Are we holding these support levels where eventually this consolidation breaks to the upside? I think that's what's coming next on the Euro Aussie. It might take a little bit more time, and this volatility continues to shrink. So we might not have great trading right now for this week, but as this narrows, this is going to have to go somewhere. Now, there may be some continuation a little bit lower, but I think as long as we hold the support at 6,500 to 6,530, I'm looking for buy only on some of my systems. And again, I can turn a robot on to buy only, and if it goes lower, I won't take any trades, and I'm fine with that. So if I want to buy low, I like buy only confirmation. That'll help that trade. Euro CAD, this one is Still range bound. I remain long on the CAD Swiss. So if I was really looking to trade this direction, I would still remain short on the Euro CAD. However, it would be short around 54. So can I sell 54 and take it down here? You can see the nice range levels from 54 to around 5100. I'm fine with that trade range-wise right now. Otherwise, I'll just stay in CAD Swiss and leave this one alone. Euro Swiss. Euro Swiss, I have a great bar count on right trader. We're currently at 105.30. We really need the bulls to get above 106. If the bulls get above 106, you can see we'll have some bullish confirmation on the right side of this trend line. We have lots of room to run up into 108, 10900, previous support at 10800. I also have a great bar count. Let me link this up here. Euro Swiss. I have a fantastic bar count on my daily chart. This is one of my right trader strategies. My right trader max reversion strategy, which is we have gone X amount of bars from hitting our shaded zone. In fact, this should be stretching into like 260 bars. So right here, we're at 263 bars. And you can see that the last time that happened was here in 2017. We stretched from this gap during the French election in 2017 all the way here to where we topped out at 1.20 and then created a massive reversal pattern. That is still the trend to this day. So if we're stretching again into oversold conditions with that type of bar count and extreme, what I'm looking for is the bullish pattern to emerge and have a reversal. So ultimately this becomes a bear pattern and a bull pattern that get us back into some type of equilibrium, or maybe we establish the low from the range down here to the high of a range up here around 120. So I'm looking at this to stay bullish. Now, how I'm going to break this trade into phases is I've explained the details here in my trading room, but once we turn bullish on this chart, once we turn blue on this chart, this is the daily chart. Once this is blue, I am very aggressive and very bullish into that shaded zone. Now, this should coincide with this shaded zone also hitting past levels of support, which is around 10800. Now, from there, do we go quickly to 108 and then pull back and go one more time higher into this 110? Possibly. If it's really slow, then maybe we have a break, a pullback, and then a go into this shaded zone. But either way, I'm really aggressively bullish once we have confirmation to trade it into 108, previous support, as well as that shaded zone on a daily chart, because there's plenty of distance to get to that level. But if that becomes a bigger bullish pattern, I certainly want to remain bullish on this currency pair towards 110 and 110.50. So that's my outlook on Euro Swiss. We just need this stupid pair to get a nudge. The hard part is you're not seeing a separation between the Swiss and the Euro. They pretty much move in lockstep. But eventually something's going to change, and that Euro Swiss will make a nice little run towards the levels that I want. Euro Pound, we can skip that one for right now. Euro Yen also not cooperating, but we're watching some levels very closely. Lots of chop on the Euro Yen. Euro New Zealand. I think this one's very similar to the Euro Aussie. We're looking at a lot of range bound levels. All right, so we have resistance around 82.50. We have support around 76. Now that seems like a pretty big space. You have resistance, look to sell high. You have support, look to buy low. So in between, we're not really doing anything. But if we're up here, look for sell only. If we're down here, look for buy only. That's the plan. All right, so it's about a 500 or 600 pip area to work the Euro New Zealand. I wouldn't mind, for right now, if we have a little continuation down lower, okay, fine. Otherwise, I'll wait for this low, possibly this low to get tested, and I'll buy it nice and low around 76. So that'll be the plan there. Euro dollar, big old snooze fest, but a great range trade. If you're buying at 108 or you're selling at 110, you're making a killing on this pair because we haven't gone out of this range for the last month and a half. So 108 holds, 110 resistance, support resistance. So you buy low, you sell high. Eventually, this is going to have to go somewhere. Okay, it's going to have to go somewhere. Now, all that wild shakeout we had is forcing price to do next to nothing. Eventually, we break and go higher, we break and go lower, but until then, we stay in here and we grind out some pips in this Euro dollar. Again, set those price targets and profit targets really conservative. Buy it at 108, go after 20 pips. Sell it at 110, go after 20 pips. You can make some decent pips with high probability as long as price isn't breaking higher, breaking lower. Then you continue to sell high and buy low. Right? That's Euro dollar. Pound crosses. Pound Aussie. Again, heading down a little bit lower as the Aussie continues to run. We are seeing some nice divergence on the Pound Aussie, but we're not getting the turns yet. So as this heads lower, fine. What I think this is setting up for is eventually we'll end up forming the low here, and we'll work our way back into this area. We're probably going to pull back into this 9,500 zone when it's time. but the confirmation is not there yet. So I did deploy a system last week. I actually jumped onto a YouTube live session with Gary. We talked about the Aussie jobs. I was long on pound Aussie. Now that's confirmation only. So I did take a small loss on that pound Aussie buy trade. Now it's waiting for the next buy trade. So you might be asking, well, why aren't you selling it? Well, I didn't just switch it, right? I mean, right now it's just waiting. I think the better trade, the bigger trade is pound to the upside. So my system's going to wait for the next buy confirmation and get it and then take the trade. That's fine. Okay. But currently we are breaking some fresh lows. We do have disagreement. We're heading into, if we get to oversold conditions, then really I'm only interested in getting some confirmation on the right side of this and then take a trade back up towards 94 to 9,500. All right. So this one likely is coming in to establish a low. If it does, and it does so this week with the pound a little bit weaker with talks of Bank of England going to negative interest rates, that's where we're going to see a little bit more movement and weakness on the pound. But we can just look left on the chart, come back into previous lows, some of these pockets here from October of last year, and that's fine. But if this hits oversold and we have disagreement in price, then that divergence is something I'm going to look to buy. Okay, pound CAD. Pound CAD drifted below 7,200. I did talk to this talk to the traders about this one last week about breaking below 72. Here's what I'm looking for. If we're breaking below 72, I'm trying to stay bearish into 6,600. So this did have a nice daily close. If we pull back this week, we have more resistance. I will look for sell-only deployments to stay in this open space back down towards 6,600. So I do like bearish on the pound CAD for right now, and if oil has more upside, this would also continue to drift a little bit lower. Pound Swiss. We were short on Pound Swiss last week. We took some nice profits, and you can see here, this was a setup. I believe we set this up on like a 4-hour and a 1-hour chart. So we had breaking, pullback, and selling. We came right into our profit zone around 117. We reached a low around 117.28. So we did protect some profits on this one last week. Here is my Flex Doc Pound Swiss. We sold it right there, took some profit on the Pound Swiss. Let me scroll down to our most recent price. Pound Swiss right in here, 265 pips, protected and closed, and looking to sell more once we have confirmation. So nice little chunk of profit on the Pound Swiss last week. And if we get another chunk, so we go from high to low, we pull back here, hit some resistance, and sell back off into 17 or lower, we'll be grabbing another chunk of profit on that Pound Swiss. So good trade on that one, protected the profits end of week. We go to pound yen. Should have protected some profits last week. You can see that the yen just continues to disobey. You know, at the same time, like, structure's not necessarily broken. I just don't like seeing this back above 132. So this is 132 right here. We are below that. We are noticing that it's high to low, lower high to lower low, lower high to lower low. If we form another lower high and we get back in towards these lows, I'll probably protect some profits. And look, we're just seeing some really aggressive, like, score point pullback. And if that's the case, fine. But it's not my favorite way to trade, especially if you're letting a robot run. I just need to do a better job of, you know, scoring some points and making sure I'm protecting those profits. And then I can redeploy it and then protect profits. So if we get back into, you know, nice profit on this pound yen, I'll be taking that and looking to, you know, kind of sell it higher. I mean, we're having those really nasty pullbacks on yen pairs for right now. But still, let's see if we make a lower low and we can pull back on pound yen. Pound New Zealand, this one's going to be heading lower. Okay, this one will be heading lower. Let me get back to my workspace. Pound New Zealand, great sell trade. Previous support becoming resistance right around 2.04. So it's actually really nice. We're looking at this one right now. I told traders last week, if we break above 204.40, then we're going to buy it and stay in this range. If we don't break above 204.40, this is a sell high with a tight stop and go back into that news pocket from last week on Tuesday. There was an RBNZ rate decision. We created a nice little pocket on the 1-hour chart. And you can see that that pocket was created, and lo and behold, price is coming back to it. So, and it's actually perfect resistance, right? I mean, we came right up into resistance right there, sell it high, sell it high. I mean, bulls never broke above to take that breakout. So this resistance held, sell it nice and high. What a great chunk of profit. 204 down to 202. There's 200 pips right to a pocket with a very tight stop loss. So good trade there on the pound New Zealand. Pound dollar, we also took some profit on this one, heading back into, we're trying to get to 20, or actually 1.20. We've let this one actually continue to sell, and we've had plenty of chances here to take some profit. So we were selling over here. ended up breaking below 22.50. We held on to it, took some profit, sold it again, took some profit. If we can hold this level and sell off again, just stay bearish on this. Right now, this support at 22.50 is resistance. So if we can hold what was support becomes resistance, we'll go down. I'm still looking for pound dollar to come into 1.20. Okay, New Zealand CAD. New Zealand CAD's making a nice little comeback, which is fantastic, and most likely should be coming back into this little news pocket from last week around 85.20, 85.30. So I am long. I have a couple of trades long on my pocket strategy going into that pocket there. And hopefully we're going to see, 50 to 100 pips collected on that New Zealand CAD. And this one continues to be a perfect storm trade, which means I'm just staying with the range-bound conditions. New Zealand Swiss on the higher time frame. Let's go higher time frame New Zealand Swiss. The bulls are holding. So we still have 57.50 support holding. Like I said last week in the trading room, if we break below 57.50, then we're bearish. But if we hold it, then this is still holding range bound. Range bound. So this is the range for right now between 57.50 and just shy of 6,000. That remains the range. Now we could break and go higher to 62. That's major past support. But the important thing here is that we're not full on bearish with the break below 57.50. So the good thing is that the structure, the price action, the support resistance continues to hold, which gives you, the trader, some opportunity. New Zealand yen, again, daily chart, still not convincingly bearish. And we have range conditions here again. So a lot of yen pairs showing some indecision. And you might be looking, well, if we have all these indecision levels, all these ranges, should I trade some type of range system on the yen pairs? I'm still a little reluctant to do that just because of this. Look, the yen can stay range bound for the next couple of months, and that's great. But I do believe that, you have to be watching the yen pairs carefully, because eventually when this breaks, it won't be range bound, and it will be one of the longest and largest trends that we will see in the Forex market. So it's great to see this for now, but eventually this structure changes and this will be a big trend somewhere else. So if you're watching, fine. Deploy it right now with current conditions, which is range bound. But eventually when this breaks, do not be a range trader. When this breaks, be a trend trader. So if you're at least paying attention to that structure, then sure, this is range bound conditions right now, and the yen is not cooperating because we refuse to go lower, but we're not breaking higher either. We're still holding these highs, we're still holding these lows, and it's range bound for right now. Right? But you just have to be nimble on those yen pairs, because when they trend, they're really, really aggressive. New Zealand dollar. This one we actually took some sell trades on last week. The critical number here is 6,000. So we break below 6,000 last week. We had a low at 59.19. And here we are with a daily candle. Now that to me is a pretty solid engulfing candle. All right, at the very least, if that's not engulfing, which it certainly looks to be, it's a piercing line, which is bullish. So if we're back above 6,000 and the dollar is weaker, then this could be a false bottom, and this New Zealand dollar continues to head up towards 62. Again, you're looking at some tough levels. I mean, it's like, look, the market's trying to confirm, and then it's faking out. The responsible traders like, look, my sell trades, they may not be as good. So I'm going to give this maybe one more day, maybe another 24 hours. Because if this is another daily bullishness that's going to kick in, I might want to cut off these trades really quickly. I do have stop losses in. Aussie dollar with my robot, I put 100 pip stop loss. New Zealand dollar, put 100 pip stop loss. That just happened to be the right number last week for putting it above some decent highs. So if I get stopped out on Aussie dollar, New Zealand dollar for 100 pips, so be it. We'll make it up elsewhere. But you can see that little fake out. We had the right decision, the right breakout, the right confirmation on the right side of a rising wedge breaking below 6,000, but price is a little reluctant. Now, whether this is a break, retest, fail to take out the high, and then it proceeds to go lower, maybe that's what we're doing here. It's just a little bit of those pullback scenarios. But I will assess going into the trading room this week. Okay, a couple more currency pairs and charts. We'll wrap things up here. I know I've gone a little bit longer today. Dollar CAD, resistance at 42, support at 38.50. So about a 400 pip range, watching closely. I want to sell high, I want to buy low. In the middle, I'm doing nothing. Dollar Swiss, nothing for right now other than waiting and buying much, much lower. Nothing at current levels. Dollar yen, still hanging out around 107. Not doing anything on dollar yen right now. Okay, exotic pairs still choppy. Oil making its way into that $35 to $40 area. Let's take a look at Bitcoin. Okay, Bitcoin creeping back up. We're at 9,700. Can we get up towards 10? We had 99.66 right back here before we dropped. What I like about Bitcoin is we're holding above the yearly pivot. Right now, I know that the mining reward, the block reward, has been cut in half again. This is the third time in cryptos or in Bitcoin's history that the block reward has been cut for miners. I believe it's now 6.25 Bitcoins as opposed to 12.5, which was cut from 26 before that, or 25 before that. So anyway, is that changing the price? I mean, that's kind of the uncertainty. Is the halvening, is the block reward going to cut profits, or is it going to affect price of Bitcoin? Right now, it seems not to be the case. So, I mean, I still remain bullish on cryptocurrencies in the long run. I mean, this low to high swing, this looks really promising for either, a head and shoulders pattern, which is setting up right now. We might have a little bit more of a dip into this right shoulder area before we have a bullish push. Or if we see a little bit more to the upside, that we take out this high, then we have a crown that I expect will still pull back, and then we remain bullish. And this becomes an A to B to C swing, and we're looking at symmetry up towards around 15, 16,000. And if it's going up there, we might have that longer run into 20K. So this actually could be a really interesting story into 2020. Obviously 2017 going from 3,000 to 20,000, 2018, 19 coming all the way back down to 3,000, 3,500. But starting to see some more opportunities in cryptos. I think all the altcoins and that kind of phased out with all the everybody and their brother was forming ICOs, and that's kind of deteriorated. I think if you stick to a solid 5, 6 different cryptocurrencies that are majors, that are popular, like Bitcoin, like Litecoin, like Ethereum. Some traders in my room are high on Link and Dash and Tron, which are totally fine. But I think playing the majors and playing the big ones with a lot of the headlines and hopefully legitimacy, that's what I'm looking at. So I still like Bitcoin. I like Ethereum. I like Litecoin. I like Ripple. Those are the big ones that I'm in right now and very interested in. I just looked at my Coinbase account last week, and I'm up about 2.5 times my investment. So trying to get a lot more than that, but at least it's promising. And it's offsetting for what I'm not doing in stocks right now as I'm waiting. At least I'm making some money in cryptocurrency. So, consistently profitable in Forex, having some nice runs in cryptos that hopefully continues to be a big, 5-bagger, 10-bagger down the road. And stocks, we just wait and wait patiently. But that's going to do it, traders. So if you have any questions, comments for me, let me know. Send me a message. You can find me. Again, YouTube is the best way to send me a comment or send me a private message. I'll respond. And make sure for this video and others that you check out on my YouTube channel, give it a like, give it a share. I'll make sure to keep all that good content flowing. My trading room will start Tuesday, Wednesday, Thursday as usual. If you're interested in joining me, it is now open for anybody. Just click on smarttrader.com, go into the marketplace, the Flex Trading Room. You can join me. You can look, just try it for a month. If you want to see what it's like to trade with me Tuesday, Wednesday, Thursday, we're talking about all things stocks, Forex, cryptos, finding some good trade opportunities. Everything is at your fingertips recorded. I also have a Telegram channel to go with that so we can keep track of our trades and our robots and everything that we're doing. I think it's worth at least trying it out. So if you have any questions on that, let me know. Have a great week, everybody. I'll see you in the trading room, and I'll see you in class. And let's make some pips. Let's make some profits. See you soon. Bye.